Hey everybody, welcome to 5 Minute Financial Markets. Look at the week ahead. Probably going to go over 5 minutes today. We've got a lot to get into. If you've been following the videos the last week or so, I've been talking about how I'm very bullish in the near term. And I still am bullish in the near term, but that near term is getting a little nearer. To be a successful trader, you've got to be able to take in new information and change your view, change your bias if the situation changes. I don't know that anything has actually changed in the market, but I've become aware of some things that are making me a little bearish beyond this upcoming week. More on that in a minute. First, let's look at the week ahead. Really not a whole lot of major news to worry about this week. Wednesday, we've got the FOMC minutes coming out 11 o'clock Pacific time, 2 p.m. Eastern. I suspect these are going to be a little bit pivoty. The language that comes out in those minutes, I think, is going to be more dovish than it's been in the past. If you saw the FOMC statement on the last rate hike of 75 basis points, for the first time this whole year, they've alluded to the possibility of lagging effects in the economy of the rate hikes they've already done. That's the first time they've done that. They've been very clear that they're going to be data-driven and they're going to make their decisions based on the data, which all the data is that the economy is red hot and inflation is out of control, so they have to keep raising rates to combat that. This was the first time that they acknowledged that there could be some effects on the economy that are not yet showing up in the data that they need to consider, which in my mind opens the door for a pivot or at least a slowdown in the rate hikes in the near term. And that was how the market interpreted that data. And then Jerome Powell came out and gave his speech 30 minutes later and just tore the market down with super hawkish comments. But I believe the minutes are going to reflect a slightly more dovish tone, which is going to be very bullish for the market. The other thing I'm going to be paying very close attention to at 7 a.m. Pacific is the University of Michigan consumer sentiment. Here's why that's important. Black Friday and really the last month and a half of the year are typically very strong for the markets. You get what they call the Santa Claus rally. People expect a lot of sales on Black Friday, so they buy the market up in anticipation. Usually Black Friday comes through and the market rallies through the end of December. But this is 2022. This is the Bizarro world. And look at what we're dealing with here. This is the Michigan consumer sentiment. It's at its lowest level in over 40 years. May of 1980 is the last time consumer sentiment was this low. And it's never been this low heading into a Black Friday. Not only that, personal savings, which was at all-time highs coming out of COVID, is now at its lowest level since before the Great Financial Crisis. November 2007 is the last time that personal savings rates were this low. So, to recap, consumers are not very confident about the economy and they don't have money in the bank. Makes for a very Scroogey Black Friday. So I'm expecting Black Friday to really disappoint, and I'm expecting the market to reflect that starting next week. So, like I said, I'm still bullish for this week coming up, especially if we get these dovish FOMC minutes that I expect. But in the past, I've been talking a lot about this channel that we're trading in. We look at the daily S&P chart. Ever since this October CPI number, we've been trading in this uptrend. Everything looks very bullish. I've been talking about a target of 408 to 410 on the S&P, and that's where I'm going to sell. And if it does get there this week, I absolutely will be liquidating all my long positions there. But if it doesn't get there by Friday, I'm probably going to take most of my length off the table, regardless of where it is, just because of what I said about Black Friday and where I think the markets are heading next week. Beyond that, there are a lot of similarities we're seeing right now to December 2018. And let's go back to December 2018 and show you what happened there. They called it the Christmas Day Massacre. Go back to right here, December 2018. Look what happened here. We had this high on December 3rd, and then the market just cratered into Christmas. All right, let's take a look at that. That was from December 3rd to December 25th. We lost over 16% in 14 trading days. That is a massacre. Like I said, we're seeing a lot of similarities today to 2018. The great Michael Silva has a really good deep dive on that in his video. I'll put that in the link so you can check that out yourselves. But this is something that I think is a very strong possibility of repeating this year. Now, you might also be asking, if you've watched some of the previous videos, what is this big, thick yellow trend line I've got here? This is a major, major, major trend line that goes all the way back to the absolute low from the Great Financial Crisis. This is the March 2009 low, and this trend line has served as support early on in 2010, and then when the market broke through, this has been resistance over and over and over, all the way up. It picked the high in 2018 before the market sold off in January. It also clipped the pre-COVID 2020 high right before everything cratered on COVID fears. It was a big area of resistance on the way back up. The market chopped around here a couple times before ultimately breaking higher. And it's also retested in 2022 as the markets come back down. Now, admittedly, it's not been the strong resistance and support line that it had been historically. You've seen a lot of times where the market sort of chopped through it, but it is a level to keep an eye on, and we did touch it exactly on Tuesday of this past week, and the market sold off from there. Maybe unrelated, it was also the top of this blue channel that I've been talking about, but just something to keep an eye on. I'm not going to make any big trading decisions based on this, but I do want to stay aware of where that big trend line is because it's been such a major trend line for so long. So to sum up, I do think the market has room to head higher. I am still looking at 408 to 410 as my target, but if it doesn't get there by Friday end of day, I'm probably just going to close out whatever long positions I have. I might keep a little bit of length in case I'm wrong, which is absolutely a possibility, but I don't want to take too much risk to the long side heading into next week, hoping that Black Friday does not disappoint. I really think it will. Have a great week. See you soon.